Thank you, Mitesh, for that. Let's now go across to Manisha. She's with us in the studio and she's going to be telling us about the one commodity that she's tracking today.
Well, thank you so much for that, Reema. The markets haven't opened on a very great shake for that matter for commodities, and the gas prices have continued to decline yet another day today. If you look at the last 1 week, we've seen the US natural gas prices decline by nearly 15%, and the TTF, which is the European Union gas prices, those are down by 20% or more in the last 1 week itself. The decline really comes in after the 27 EU energy ministers have agreed to cap the gas prices at 180 euros per megawatt hours there. Well, remember, all of these members are yet to sign, and that is what would be taken in as an accord there. Also, when you look at the gas prices there, this would come in place from 15th of Feb 2023. We've already seen G7 put in a cap on crude prices from 5th of December there. So the next tranche really comes in for gas going forward. As I said, the deal will be formally approved by countries in writing, and that is what the street is awaiting right now. The price cap, as of now, applies to private gas traders outside of energy exchanges. But that's exactly where the concern comes in from as well, because ICE says that if a price cap comes in, then they would move the most traded natural gas contract that they have right now out of Europe. So there's a showdown that you can expect over the weekend when it comes to both of these authorities there. Take a look at the prices then, and we've seen a constant decline onto this one. This actually is the IEA report which says that 30 billion cubic feet of a shortfall is what you can expect in sense of gas in 2023. That clearly has been moving the prices as we've seen them. The other thing is the gas demand itself, which is expected in Europe to be at 395 billion cubic meters there. This is what the gas prices have done in this year. This is a report card really. When you look at the US gas prices, we've seen a high of nearly $10 per MMBTU and a low of 3.5. Currently, we're trading at 5.8. Even bigger range is what we've seen in the European markets at a tune of nearly 350% of a move that we've seen in this year. This is the seasonality in price. This is quite interesting, really, because when we talk about natural gas, we expect the gas prices to be firm during the winter months. That's exactly what they do not do. This is a report from Capital.com, and this is an analysis that they have put across from 1991 onwards. It suggests that in the winter months like Jan, Feb, etc., you actually have seen the gas prices weaker because this is the time that countries store enough gas and they're watching out for the winter demand. It usually also is weaker when you look at the summer months, which is June, July, August, etc. The prices start to build up from August, September, October onwards. Those months should come in on your screens, and those are the most bullish months, by the way, because this is between the winter demand and the summer demand. And this is the time when you already are building up for the winter demand expectation. So this is the time where the demand is at the highest, restocking is happening. So September, October is actually the highest moving months in that matter. The final plate comes in, and this is the gas price outlook. And while we've seen $10 per MMBTU of a high price in this year, that is not the expectation that the banks and brokerages have for the next year. Most of them are talking anywhere between $5 to $8, $4.5 to $4 exactly is what Bank of America, UBS, and Citi also seem to be talking about.
Manisha, very interesting. Thank you very much for that. Get into a break. On the other side, our special segment, Outlook 2023. Lata will get chatting with Samiran Chakraborty of Citi Research and Surendra Goyal of Citi to discuss their India outlook for next year. Stay tuned.